I think that's ultimately going to happen, especially in a world where the volatility for the bond market, especially the treasury market, continues to stay higher for longer here. And if that's the case, the needs for an alternative that is safer than treasuries, that is less volatile than treasuries, is actually in becoming higher and higher demand. Gold will be that alternative that will eventually become a defensive assets for those allocators. And so we're yet to see that money transition back to gold. And I think we're in the process of seeing not only some education process of that, but also, folks are starting to understand better what this precious metals market has the potential to do in a bull cycle for gold, which I think we're in one right now.
Gold prices have surged to a 7-week high in midday U.S. trading on Monday, bolstered by increasingly bullish technical charts, attracting more speculators to the long side of the yellow metal. This uptick comes as precious metals analysts at Heraeus report growing interest in gold from U.S. and U.K. investors, signaling a potential shift in market sentiment. Tavi Costa, partner and portfolio manager at Crescat Capital, a Denver-based global macro asset management firm, believes we are in a bull cycle for gold. Costa suggests that ongoing investor education about the precious metals market could increase prices as more allocators recognize gold's value as a defensive asset. According to Costa, multiple factors could contribute to gold's ascent, including potential dollar weakness and other currencies bottoming out against the dollar. Despite favorable interest rate differentials, the dollar's relative underperformance may signal an inflection point, potentially benefiting gold prices. However, the precious metals market faces a complex landscape of influences. The recent attempted assassination of former President Donald Trump has led to safe haven bids for the dollar, which typically pressures gold prices. Conversely, slower economic growth and weaker retail sales in China may mitigate gold's losses, as investors often turn to the metal during economic uncertainty. While gold sees increased interest, silver prices face potential downside risks from the development of less metal-intensive solar technologies, according to Heraeus analysts. This divergence highlights the nuanced nature of the precious metals market. Looking ahead, traders are keenly focused on the upcoming release of the Empire State Manufacturing Index from the U.S., which could present short-term trading opportunities and further influence precious metal prices. Please tune in for our exploration of TaviCosta's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I think there's a lot of things going on that could drive gold. If you think about the dollar itself, gold and the dollar can rise together, but I do think that the dollar looks to me like it's in an inflection point. And the main reason for that is I pay attention to assets or asset classes that are not moving when they have sort of the tailwind, behind them. In this case, with the dollar, I can recall a time in history when the interest rate differential of treasuries versus other sovereign debt across the globe, especially developed economies, has been this acute in terms of the difference. And so I think it shocks me that the dollar is not stronger. Why is the dollar not stronger? Why are we not receiving even more inflows in the dollar? And the dollar is, taking off in an environment where it should be, given this changes of interest rates. And I think it has to do with expectations of what the Fed is likely to do. But I also think that it speaks volumes about the demand for the dollar more recently. And I would suspect that we're getting close to a bottom in a lot of other currencies relative to the dollar, and that could become actually a very important catalyst for gold prices to go a lot higher. Gold prices have broke out from a triple top recently, as you know very well, and has been sort of consolidating recently in this levels, and that's normal. A lot of asset classes, especially like this, the size of the gold market, will actually do that. It's very important for us to understand where would that demand for gold come from. There's so many places it could be coming from. It could be coming from central banks. We're still to see the institutions of the world, the family offices, the pensions, and 60/40 portfolios transitioning to the gold space. And I think that's ultimately going to happen, especially in a world where the volatility for the bond market, especially the treasury market, continues to stay higher for longer here. And if that's the case, the needs for an alternative that is safer than treasuries, that is less volatile than treasuries, is actually becoming higher and higher demand. And I think gold will be that alternative that will eventually become a defensive assets for those allocators. And so we're yet to see that money transition back to gold. And I think we're in the process of seeing not only some education process of that, but also folks are starting to understand better what this precious metals market has the potential to do in a gold, a bull cycle for gold, which I think we're in one right now.
As global economic dynamics continue to evolve, a significant trend is emerging in the precious metals market: the shift of gold from Western nations to the East, with China at the forefront of this movement. Tavi Costa highlights that while China is leading the charge in central bank gold purchases, it's not alone in this endeavor. Other economies have also been increasing their gold reserves, Costa notes. However, he emphasizes a crucial point: the reported figures only represent disclosed purchases, leaving room for speculation about the true extent of accumulation. This trend is further evidenced by Canada's growing gold exports to China, underscoring the broader movement of gold reserves from Western countries to Eastern nations. The first half of 2024 has seen a remarkable surge in Asian gold demand, with several countries showing increased interest in the precious metal. In Vietnam and Thailand, investors have been willing to brave long lines and high prices to acquire gold. South Korea has witnessed an unexpected phenomenon, with gold flying off convenience store shelves, indicating a growing interest among retail investors. Meanwhile, India experienced a significant uptick in gold demand during a recent important festival, further cementing the metal's cultural and economic importance in the region. However, China remains the primary driver of Eastern gold demand. The Chinese central bank's strategy of buying gold while simultaneously reducing its U.S. Treasury holdings has caught the attention of global markets. This institutional move is mirrored at the retail level, with young Chinese investors lining up at shops to purchase gold beans, small, easily tradable units of the precious metal. Let's get back to the interview.
I think that has been a big component of this movement in gold. Has been the fact, I think the gold bugs have always believed that central banks are buyers of gold and would ultimately come back. That view has been confirmed recently. Central banks are buying gold. China is not alone. There's other economies that have been buying. And by the way, we're talking disclosing purchases, which who knows how much it's happening undisclosedly as well. It's a very important point because the math of the disclosed amount of gold does not really justifies the large movement in price that we've seen recently. In other words, undisclosedly, there has been a lot more buying that we know of. So, who is actually accumulating? Who knows? But we can all have views about that. I think China is facing its own Japanification moment in terms of what happened after the bubble, the real estate bubble of the late 90s and the late 80s and so forth in Japan. And when Japan actually went through, rather than stagflation, they went through something called stagnation. And I think China is facing something very similar, and it's in much more desperate need to improve the quality of its reserves in order to preserve as well the stability of its monetary system. It's a huge aspect of the Chinese economy. And so I think that the ownership of gold and that transition towards gold, it's happening across many places, but really China has been sort of a leader of that movement more recently in a scale way. And I would also point out there was a research asked by a bunch of central banks and survey of what the main reasons for owning gold really is. And one of the main answers for that was also the neutrality aspect of gold. And neutrality meaning the deglobalization trends we're seeing and the need for countries to own a security that doesn't depend on another economy is such an important aspect. And gold, in terms of the history and also in terms of being a neutral asset, is the only alternative that really offers that. You can say Bitcoin, but Bitcoin doesn't have anywhere close to the history of gold. And so central banks take note of that and obviously been accumulating the metal over time. And so this is an important trend to be aware of that I think it's only getting started. I think, first of all, that view that we're going to see higher gold prices and lower mining stocks performance is the most historically unsupported opinion I've ever seen in my life. You can't support that throughout history. I mean, in the 40s, in the 70s, in the 2000s, you name it. Every bull market in gold also coincided with a major bull market in the mining industry. So Let's start there. History does not support that view. And I think that's the main part of it, by the way. The fact that we have overly conservative people and the fact that we have, the overly pessimistic folks about the mining space, to me, it's just a sign that we're at a bottom or near a bottom, right? I mean, we've been there for a while now, but the difference is that the metal prices have been a lot more constructive than they were back 3 years ago. We've seen people come along in terms of, okay, we might need copper, in this world. We might need a lot more zinc. Gold is actually, does have demand from central banks. Oh wow, that wasn't the case, maybe as much as it is today 3 years ago, or since the Russian invasion situation and so forth in Ukraine. And so all these things have shifted. And so when you think about the check boxes of making a structural bull market for gold, they're all checking, right? It's just the pessimism is there. And ultimately that changes that view. I think about this, about how many people have to change their opinion from bearish to bullish would be significant and would drive prices ultimately.
How might the ongoing shift of gold reserves from Western nations to Eastern countries, particularly China's aggressive accumulation strategy, reshape the international financial landscape and monetary system in the coming decade? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.